Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice.
As a kid, he had a county fair blue ribbon winning goat named Squirt.
Your host and my dad, Matt Hansen.
Welcome back to Better Returns, Invest Like a Pro. I've got another one of my good friends on the call today, Dan Calonge. Dan is a seasoned executive with an MBA. And if that's not enough, he's also a multifamily investor focused on helping immigrants get exposed to the power of real estate investing. Dan's own family moved from Cuba, so he identifies the challenges of not knowing how things operate in a new country. So his mission is to assist other immigrant families in generating generational wealth. Welcome to the show, Dan.
Hey, Matt. Good to see you. Thanks for having me.
Well, I always like to start with your origin story. How did you get involved in passively investing in real estate and actively investing in real estate?
Yeah, it's a great question. I mean, it's been something that I've been thinking about for many years. And, I think it started for me in the early 2000s, started reading a little bit back then about real estate. And, but I was a very busy W-2, had my job and I was very busy in my job and I liked what I was doing. So I didn't really pay much attention to real estate. It was something that I was always thought would be interesting, but it really wasn't, I want to say, until the pandemic hit, where we were all sent, in our company, we're all sent home just like everybody else. And so I was at home, couldn't really do very much. And I thought, this is a great time for me to dive into real estate. So started to voraciously read, listen to podcasts. And it came pretty quick to me that I wanted to be able to work with somebody that was experienced in this area. I certainly wanted to make sure that I was making the right decisions and thinking about things the right way. So, I connected with, Mark Kenny, who you know as well, and been, working with Mark for a while now. And it's been a lot of fun. I mean, it's where I've been over the last 3 years is just a whirlwind. I can't believe how much I've grown in this area since that started. So that's how, I got to it. Luckily, the pandemic kind of interrupted the pattern of working to see something else, to see a different approach to life.
That's interesting. You're one of those people that took this downtime, if you will, and bettered yourself and your family and other people. I love that. That's great, Dan. Let's talk a little bit about, you're saying that, just now at this age, and you're still a very young man, you discover the power of real estate. And I just love your focus is on helping immigrants. So can you imagine? I can't imagine being new to the country, just figuring out how to operate on a day-to-day basis, and then let alone what should I invest in? So let's talk a little bit about your journey in that, or how you help people overcome those obstacles.
Yeah, I mean that's really at the heart of what I'm passionate about. My family came to the U.S. in 1960. They fled Cuba like a year or less than a year after Fidel Castro took over. And their thought actually was that they would only be gone for maybe 6 months or 9 months, and they'd be back in the country. They left everything behind, thinking they're going to come back to it eventually when things settle down. Well, Fidel Castro didn't go anywhere; he stayed, and things just kept getting worse. So they ended up never going back again. So my family had to readjust to a new language, a new set of rules. One of my grandfathers was a prominent attorney in Cuba. And since the US has a completely different legal structure, he couldn't be an attorney here. So he started waiting tables and just doing whatever they could to get by. And if it wasn't for the kindness of some Americans that helped my family out, it probably would have been a much more difficult road. My dad tells the story of my grandfather and my grandmother when they received one of their very first times they went to a food shelter and they got this big jar of peanut butter, and they're not really sure what to do with it. Like, what? So they tried eating it just straight, and it's like, oh man, this is, no one told them about jelly yet, I guess. But no, but they really valued it, and it's interesting that my grandparents passed away in the late 90s, and my dad was cleaning out their stuff, and he found that same peanut butter jar.
Oh,
It's saved since the 60s as a reminder of kind of what they went through. So for me, it's something that I'm very passionate about, is helping the immigrant community. I'm on the advisory council of the largest social services agency in Cincinnati. I'm the co-chair, actually, of the council, and we focus on helping immigrants when they get to the U.S. So for me, it's really trying to pay back those that provided for my family, and it's the little, the least that I can do. And what I love about this background and the way I'm thinking about this is that I think this ties really well with investing, because of the fact that new immigrant professionals to the United States, don't really know a whole lot about how things work. Things that you and I might take for granted,
right.
like Social Security and all these kind of fundamental things that we all sort of know how they work. Well, when you're new to the country, you don't know any of that. And then forget the idea of knowing about real estate and commercial real estate and things like that. That is just, it's not even on the radar. And, I mentioned a minute ago, boy, it would have been nice if I would have known about this earlier. People always ask me, is there anything that you would have, regrets? I'm like, well, I don't have a regret, but it just would have been nice I would have dove in this a long time ago. I'm 52, so I still have, a lot of time left, but having the ability to get started in this, real estate is not a quick, rich, get rich quick thing. It's really patience, time, the right behaviors can get you to where you want to go. But so really, I've been focused on my investing career now is to helping other immigrant professionals find a way to grow their wealth through real estate, like many other Americans have done that know about it.
I think that's so wonderful. You've got to focus in a niche, because there's not a lot of individuals out there. I think you and I have some common friends in our masterminds that are doing the same thing, but there's only a handful of individuals like yourself that are doing things like this for immigrants. Specifically, you speak Spanish and Portuguese, both?
Yeah, that's right.
Correct. So like, who can they talk to that really understands them and can translate all the crazy things that it's a whole new industry. Wall Street doesn't want people to know about this, let alone, if you're an immigrant, you haven't been exposed to this. So I think it's even doubly important that you're sending this message out to the individuals that just don't have this opportunity unless you bring it to them. I think that's so great, so powerful. Any other challenges that you see as an immigrant getting involved in real estate investing?
Well, I mean, if they're in the U.S. and they've got a Social Security number and everything, then it's pretty straightforward to get involved. There are folks that potentially live in other countries that want to invest in U.S. real estate, which is certainly possible, but it does take a little bit more. You have to set up an LLC and things like that in the U.S. But for those that are in the U.S. and that are here permanently, have Social Security numbers, it's a pretty straightforward process. The challenging part isn't so much that, it's the whole mindset and the whole understanding of, okay, what is this again? And does what really the returns are like that? Really, they're that good, they're that predictable, really? And it's one of those things that it's, and to be fair, many of these folks, come from countries where there's a lot of, I don't know, like corruption and it's just, so there's sort of an inherent distrust of the system, so to speak, based on what they experienced back in their own country. So for many, one of the great things about this country that I think people don't realize is that, we have rules, and we have rules that for the most part people follow. Now, Are there crooked people in the US? Of course there are, they're like anywhere.
Mhm.
But the vast majority of people follow the rule, follow the law. If there's things that have to be done a certain way, they're done that way. But it's not that way in many other countries. There might be laws or things written formally, but what actually happens in the street is very different. And so getting that mindset turned to where, no, this is a legitimate investment
Right.
vehicle that is, we have attorneys that work on these, we have banks, we have all kinds of different organizations that have their hands involved to make sure that these things go well. And it's a little bit of a mind shift for them to be able to come out of that old experience they had in their past country to how things work here.
That's fascinating because that never occurred to me that, we have institutions to protect investors here. In other countries, it's probably not. It's more buyer beware. Like you said, we have attorneys, we have the SEC, Securities and Exchange Commission, all these other agencies that are there to protect you. But I didn't realize that doesn't exist like in all other countries. We just assume it's here, it's everywhere.
Well,
That's really interesting.
to be fair, there are organizations like that in other countries. The problem is that if you have enough money to pay somebody off,
Right.
or then the rules kind of go out the window, and that doesn't really work that way here in the U.S. Even if I'm sure there's exceptions, I'm sure, but for the most part, you can't just go and pay off somebody at the SEC to do something for you. It doesn't work that way. It doesn't work that way. So, which I think is a great thing about this country, and why so many people love the United States, is because they know that here they get a fair shake. It's not about who has the biggest bribe or the biggest anything. It's, we're all equal. And that's one of the really neat things about this country.
Excellent. Thanks for sharing that. It's a different perspective that I never occurred to me. Well, let's shift to kind of like, what are you doing personally? What's your personal experiences in investing in real estate?
Yeah.
What are the type of activities you're doing now in real estate?
Yeah. So my first foray into real estate, when I started doing a lot of research and trying to learn about how to get involved, I first started looking, like many people, maybe I should buy a house and rent it out. And that to me was what real estate investing was in my mind,
right,
at the time. And so that was the path I was thinking about going into. But then as I thought about it more, I'm like, well, okay, maybe, I cash flow, say $100 a month or something like that, $200 a month, that's, maybe $2,000 a year. Is that really going to move the needle very much?
right.
I felt like, not necessarily. And so, I thought about it some more. And so what could I do to potentially go bigger with more units? And this is where, I credit the people that I've met, people like you, people like others that I've talked to over the years that have helped me understand, hey, there's ways that you can get involved in apartment complexes and larger multifamily properties that can give you much better returns than you could a single family home. And that's how I got exposed to it. And once I did my first investment as a limited partner, I said, well, this is something that I'd like to see if I could do this actively. So that's when I decided I want to become a more active player in this. And when I started seeking, mentorship and talking to people who do this, because for me, it's one thing to read and it's one thing to listen, but to actually talk with somebody that's actually done it and been through it and done it many times and done it successfully is a game changer. And that for me really made me aware that, no, I don't have to start with a single family home. I can put my money into an apartment complex, for example, and it can do very well. These are things that I had no idea. I always thought apartment complexes are owned by banks or by wealthy families, and I never thought twice about it. So to think that that's not really the case for many of them, that it's money that's pooled from a bunch of investors, why can't I be one of those investors? So that to me is something that's super attractive of this whole space. And it's very egalitarian. Like we all have the same opportunity to get involved in something like this that I thought it was just for the ultra rich, and it's not the case.
Yeah, like 8 years ago, I thought the same thing. people that own these apartment buildings are large corporations and all that. And then when you get into realize, hold it, they're people like Dan and I. We're part owners in these large apartment complexes. We can benefit from it. I think that's great. So let's talk about like your first as a limited partner, as a passive investor. What was that experience like? Particularly when you wired that first big, check. I know that was always nervous for me. What was your experience like with your first passive investment as a limited partner?
Yeah, same for me as well, Matt. I mean, it was wiring the money. I was like, wow, I never wired this much money before. and so, I just looked at the opportunity. I knew one of the people that was running it, one of the general partners. So I thought, okay, I know this individual and their track record. So I'm looking forward to putting this in there. And that's how it started. And, and this is not like we mentioned before, this is not a quick rich kind of scheme. So, it's going to take years for that to pan out. But after I did that, I said, well, this is great. I mean, where's the next one? So
it's like, well, so what was your criteria in your first one? Like now, you're well immersed in this and you really are an expert at it, but your first one, what were the key things that you really looked at being new of saying, yeah, this is the investment I want to put my money in? And what was your thought process and what things did you look at?
Yeah, probably one of the top things that I looked at was the integrity of the team that I was investing with. Because there are properties, there are opportunities to invest in real estate syndications all over the place. When you really look at it, like at the time I didn't know that, but when you look at it, they're everywhere. So what separates certain investments from others? And for me, the way I looked at it was I want to make sure that I'm investing with a team that I trust. And the guy that I was working with at the time, who's a great friend of mine now, we've become real good friends, is he's somebody that I thought, okay, if he's a part of this, I feel really good about it. And it was also in an area that was growing. It was in Alabama, and it is an area that was growing, had really good numbers as far as what the property looked like, and so that's gone forward. And so it's been good to see. Looking back on that, I'm glad that I looked at that with that kind of lens, because the economy goes up and down, all the time. Real estate goes up and down, and so to invest with somebody that is reputable and has that kind of character, to me, was really important.
That's a really good point. I think I kind of overlooked that when I started investing. I didn't vet the individuals as much as I did the deal. I really got into the numbers of the deal, made sure the pro formas and the projections all looked reasonable. But I wish, and I've only had one that kind of went a little sideways. I didn't lose money on it, but I didn't make as much as I should have because I think I bet on the wrong jockey. The right horse was the wrong jockey. Yeah, and I think that's you did the right thing, Dan. You actually went deep on the individual versus just the deal. And I just that was one of my biggest mistakes. And I've only made kind of one of those. I learned really quick from that. So that's a really good point.
I mean, it was, for me, it was more about, the IRRs, the returns, and all the pro forma numbers, that's great. But at the end of the day, do I trust the individual that's doing this to be able to do what they said they're going to do? And that was really what I judged it on at the time. Now I know a lot more, and I'm a lot more, I'm educated on a lot of parts of multifamily. But at the time, that's for my first one. That's really what I looked at.
Okay, so now you're a seasoned real estate investor and syndicator. What markets, with all this knowledge, what markets in the U.S. do you kind of say, you know what, these are the places I want to put my money that you guys are looking for deals?
Well, and just to be clear, I still have a lot of growth to go in terms of all of my expertise. But today, after being in this for a while, I'm still a big fan of the Southeast. I'm still a big fan of Florida, Georgia, Texas. Florida right now is going a little bit difficult now with insurance rates and things like that that are getting pretty high, but those are areas that are just growing. Like I recently bought a home, which is another thing that I did for real estate investing. I bought a home to turn into a short-term rental,
Oh, good.
just north of Charlotte, North Carolina, and Charlotte is exploding. I mean, so the whole Southeast is really an area that I think has a lot of attractiveness to it in terms of just the general demographic trends that are happening there.
Excellent. I agree. I agree. All those markets, those same markets that I'm looking at too. Now the old get your magic ball out. I always like to hear what's Dan's personal prediction of what's going to go on in the multifamily commercial real estate, specifically multifamily, the next 6 months, a year. Right now, it's really tough. I know we're looking for deals. We're not finding things that are really pencil, as we say, don't look really profitable when you do the projections. So not a lot of deals are being done right now. What are your thoughts on the future? When's this going to turn around? How long do we need to wait? We've got lots of investors that are waiting for deals, but we're not going to bring a deal just to bring a deal. So what's your prediction?
Yeah, I mean, the way I see things right now, and from everything that I've read, is that interest rates are going to still go up some more. We're still not done with the rate hikes, and the Fed is going to take their time to make sure that inflation is down to 2%. That's their goal, and they've stated it many times. We're not at 2% yet. I think the last was over 4%. Yeah. So we still have a ways to go. So given that the interest rates are going to be somewhat higher for a while, I have a feeling that at some point here, we're going to start to see a lot more multifamily properties go on the market because their debt now is expiring and they have no options. They can't get a new loan at the much higher rate now, right, because of what's going on. So maybe their rate cap is expired. I mean, who knows? There's a lot of other things that could happen. So I have a feeling that in the next 6 months or so, we're going to see a lot more distressed opportunities, and not distressed in the terms of they're run down or they got any problems with them, really distressed in terms of the financing and the way it was set up. And 2 or 3 years ago, there was no inkling that this would happen. Right? It really makes you think about how you approach multifamily investing and making sure that you come up with these plans of things that you think at the moment, well, interest rates could never go up that much. Being prepared for those kinds of things is really important, and as this last couple of years has shown.
Yeah, I think that's true. Everybody would always have one exit plan. Well, I'm going to sell it in 6 years or when I've doubled my investors' money. Yeah. Well, maybe that doesn't work nowadays. I think we've all looked, when we're looking at a deal, we look at what if I need to refinance? What if I need to, recapitalize the deal? What if, what are my other options? And I think that's really made that now you're going to see the good operators really come into play, and the mediocre ones are the ones that are going to have challenges. So I think you're right in that. I would agree with your assessment, Dan.
Yeah, you're absolutely right, Matt. The right now is the time for the strong operator. And the ones that can really operate well are the ones that are going to do well, which is great. I mean, this is part of what makes real estate so interesting.
Yes, exactly. Well, very good. You shared some outstanding knowledge. Now we're going to move on to the lightning round. Dan, are you ready?
Ready.
The fun questions just to get to know Dan a little bit better. Number 1, this is going to be interesting. What was your nickname as a child?
My nickname was Eddie as a child.
Eddie?
So my original name was Edgar, my first name. And this is funny. Not many people know this. So I was born Edgar Daniel. Daniel's my middle name. And when I got to 4th or 5th grade, I finally sat my parents down and I said, look, I'm tired of being called Edgar. I hate the name Edgar. I want to change my name to my middle name. And so they looked at each other and like, well, I guess it's like, I want to do this with a judge. I want this official. So we went to a judge and changed my name. And so when I was a kid, it was Eddie. Yeah.
As a 4th grader, you were really that convinced that, okay, this name does not fit me. I'm going to change it to but Dan's an awesome name. Edgar's pretty unique too, though. That's fascinating.
Yeah, I mean, now looking back, it's a fine name, but as a kid, I just didn't like it. I don't know. I mean, it was just fourth grade thinking, I guess.
I love it. But I love your parents really listened to you. Most parents would just dismiss it. No, you just go away, whatever we gave
Right.
you. They actually went through the steps to legally change your name. What great parents you have. That's so wonderful. Question number 2. Are you a morning person or a night owl?
Definitely a morning person. I find that to be the best. Like most people are asleep. Most people are not online pinging me or anything. It's very
Right.
quiet time. I can think. I can So I love that about the morning, and I feel refreshed when I get up and out and I'm working in the morning. So for me, I think I'm more a morning person.
Wonderful. Very good. Number 3. What would be the first thing you do if you won the lottery?
If I won, I hate to sound cliche here, but I would probably invest it in real estate.
It's probably one of those common answers because I'm asking this. This is the audience. This
course,
is what you
yeah.
guys are going to say. Most people say that. Yeah.
Do they really? Yeah. It's
Yes.
I mean, it's one of those things. This is a good example, Matt, of mindset. So when you look at the typical lottery winner in this country, from what I understand, they spend their money on cars, on this, on that, all kinds of gadgets and things that they can buy with it, and very often end up with no money a short time after that. And to have the mindset to say, you know what, maybe that's not the best long-term approach for me and my family. Maybe it's better to put that money away into something that can make more money later. It's a mind shift, and it's something that lottery winners are. And it's a great example of that mind shift that you need to have. And I think if you're listening to this podcast, then you probably have that mindset too, the one we're talking about here. So, but it's just an example of the mindset shift that people need to make.
Yeah, I think that's why it's the common answer. Yeah, I think the number is like 80% of lottery winners within a year or two are worse off than they were before they won the lottery because they got into debt. Really? Worse off because they don't have the knowledge that we do. When I ask this question, we all know the value of long-term investing in real estate. That's how most people become millionaires. They've got some type of real estate in their portfolio. So
yeah, that's right.
It's a good answer. Number 4, if you could live anywhere in the world, where would it be?
Well, I would have to say in the United States for sure, but I would love to have somewhere in Spain, a place to live part-time, and maybe my wife and I were kind of talking about this, maybe having a property there that we would rent out as an Airbnb and have that as a rental, as a real estate investment. We can write off the trips out there for business and things like that. So
spoken like a true business person. No, by the way, I can write that off. That's great thinking. I love that. Where in Spain? Is there a specific city?
Well, we were there about 6 months ago. We really liked Granada. Beautiful, beautiful southern Spain is just gorgeous. It's warm. The beaches aren't too far away. So we love that. But I'm sure, you ask me again in a year or two, I'll say, well, I just came back from this place and I thought it was pretty, who knows?
That's wonderful. And the final question number 5. What one piece of advice would you give to new investors to help them get better returns?
Boy, I would just say learn. Just learn. Read, listen to podcasts. But most of all, I would say probably the biggest thing would be to talk to other people that have done what you're trying to do, because you're going to get insights that you would never get otherwise. Listening to this podcast is a great way to educate yourself because you hear from different people and their different perspectives on real estate and investing that you're just not going to get. So I'd say that's probably the biggest advice I'd have.
Excellent. Excellent. Well, thanks so much. And thanks for being on the show, Dan. You're always fun to chat with. I'm fortunate to have you as a friend. Thanks again.
Thanks, this is great. Congratulations on the podcast. I think it's awesome. And
and where can people find you to learn more about Dan?
Yeah, so they can, if they want to, I have a free download passive investor guide to real estate investing. It's at immigrantinvestorclub.com. So immigrantinvestorclub.com, and then they'll find it there.
Excellent. And that will be in the show notes. So take a look at the show notes. You can contact Dan. Thanks again.
Awesome. Thanks, Matt. You take care.
Bye-bye.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.